Alrighty, we're going to be backtesting October the 26th, 2022 for the pairs ES and NASDAQ. We will start from October 26th, 2022, and we will go on as much as we can in the next 30 minutes, just because it is pretty late at the moment. So first things first, I want to check out the news. If we see here, October the 26th, we got orange news, new home sales at 10 a.m. 10:30 we got crude oil inventories. Crude oil inventories I'm not really too worried about, so I'm just going to take note of that 10 a.m. liquidity. So I just have these vertical lines drawn here as kind of like a reminder of what time that the news are going on. But first, let's go here and do our technical analysis. So on ES, you can see we have our previous day high here and then our previous day low right here. If we take out our Fibonacci tool here just for visualization purposes, we can see that the market created the low and the high. Market returned here to a discount, and then market returned over towards this gap here. Now, physically, we can see that the market is closer towards the previous day high. Therefore, we are looking for a buy on ES. Now, we want to ensure that both pairs are aligned with biases. If they are not aligned, I'm not interested in trading for the day, simply because it just either means like an indecisive market, and it's just not something I'm looking to trade in. So now if we take a look at NASDAQ here, our previous day high is all the way up here. Previous day low is right there. I don't even need to draw the Fibonacci tool for this one, but you can visually see that the market is much closer towards that previous day low. So right now, right off the bat, our biases are completely different for both of them. We're looking for a buy on ES, and then we're looking for a sell on NASDAQ. It's really not the best right now. So I'm not gonna be taking any trades this morning, but for educational purposes, I will run through the simulations here. So we swapped the previous session high here, which is a nice for a variation one of the EM1 strategy that I talked before. So now we'd ideally be looking for a 10-minute market structure shift to occur here. So we swept the area here. We came back to the discount array. It failed to break up higher. So now what we'd want to do is look for a 10-minute market structure shift, which should be right here. Now we want to jump down to the 5-minute now. Simply because we use the 10-minute time frame to mark up highs and lows, to use as our market structure shift, but we analyze these market structure shifts using the 5-minute time frame, just for visibility purposes. So using our Fibonacci tool, we want to identify the fib strength, and what that means is whatever candle closed and broke structure, we want to draw the fib tool from the candle high and the candle low. And then with these red lines, the 40% and the 60%, in this scenario, I want this candle body, the one that broke structure, to close below both red lines, and then vice versa for a buy. So because the candle body is not closed below both red lines, I'm waiting for what I call a continuation. So any candle that doesn't break this high, essentially, or do anything erratic that breaks these two red lines, like candle body wise, then I'd be looking for a trade after that. So it still hasn't happened, which honestly so far is kind of looking like it's going to be holding up for a reversal. Okay, that reversal did not end up happening, which is nice. We had our break right there, which left behind a propulsion block. A propulsion block is a valid order block, so theoretically you could have taken a trade there, but keep in mind right now both biases right now on ES and on NASDAQ are not aligned. So for that reason, any of these trades are just not going to be taken at this point in time. This is just for learning purposes. So we can see here in this case that this would have worked out very beautifully. if if we actually took this trade with the bias that I just taught right now. But it's just not the best probability. And just for, again, simulation purposes, if it tanked this hard towards the previous day low, what do you think happened on ES? And we were looking for a buy originally. So let's go to the 10-minute now. Sorry, actually, let's go back to the 12-minute. Let's draw this up a little bit. So if we were looking for a buy, we'd either be looking for EM1V1, which the variation 1 essentially just means we sweep a previous session low, in this case. And then once we sweep that session low, I'd be looking for a 10-minute market structure shift and then going on from there. Variation 2 is, instead of sweeping a session low, we break a session high. Market returns to that session high, and in this case, that session high would be used as a discount array or a discount session array. And then if we have a 10-minute break of structure after mitigating this discount array, it is very high probable to continue the trend upwards to the previous day high. So noting here, we did break that session high. We returned to the session high. Market reacted, but market ultimately failed to break structure. We can see that very clearly here with the wicks there. Very, very strong liquidity was swept there. So if we were looking for a buy, we would, at this point, we wouldn't even be looking for variation 2 anymore. We would just be looking for variant 1, simply because this discount array completely failed to cause a reaction in the market. So now we would be looking here at the previous session lows to be swept, and then we can look for a variant 1. So now let's go back to our 10-minute time frame. Okay, we can see that it was swept here. This little point here was swept. That counts. So now we would be looking for a 10-minute market structure shift, which can be right there. However, note right here, the news is coming up. News is coming up for 10, but we do have a reminder 20 minutes beforehand. So we do not want to be executing a single trade during this news. Just as a safeguard there, like, we're all about risk management. Like, if you had a $4 million account, you're not going to take these stupid little trades. They don't mean shit. So there's no point in doing so. So market had a strong 10-minute market structure shift here. Now, we're already not taking this trade just because of the biases were so messed up. But this would be the order block. This here would be the order block that we would be executing off of towards the daily high. So let's just draw it up there. It's happening right during news, which I guess makes sense because that news injection would be needed to power a move such as something this size. And it's kind of nice too because the 3Rs normally line up very nice with these liquidity areas, so it just makes it just that much better, really. Okay, well, I guess we can see here that if we executed both of these trades, they would have been winners ultimately. But, once again, the biases just were not aligned whatsoever. So for that reason, we are not going to be taking these trades. But it is always good to journal, so let's do so. I will count them as invalid trades, unfortunately, but that's how it rolls. That's how it goes. Invalid. Oh, yes. Keep track of the stop loss size as well. For NASDAQ, the limit I have for that is set at 100 ticks, where on ES, it's a maximum of 75. Okay. Okay, now that is done, we are looking for either an EM3 or an EM2 model. So what that means for EM2, we are looking for a reversal after we sweep the daily liquidity, and then EM3 is essentially just kind of like a daily trend continuation. So once we sweep the daily liquidity, what could end up happening is the market continues its trend. Market returns to a discount or premium array, and then we have a break of structure, and then we can continue the trade from there. So let's see what happens here. Let's just remove all these drawings here. So we want to make note, if we're looking for an EM3, we want to make note of all of the possible session arrays possible here that we can use. The daily liquidity, the daily high does count as an array as well. It's just not something that I use too often, just because it's just such a big time frame that we're looking at there. So let's start off with ES here. Well, now actually once we see NASDAQ here actually had a very strong rejection, which is kind of indicating that this is just one big fake out to the upside. Okay, so one thing to make note of here is once market tapped into this liquidity here, we can look for a EM2 or an EM3 model. So we first want to mark up our 10-minute market structure shift area right here. Let's go down to the 5-minute time frame here. Now, first thing that we want to ask, is this a strong close and break of structure? The candle, which is this candle here that broke structure, is the candle body above the two red lines? In this case, it is. So for that reason, this is a very strong market structure shift. However, with that being said, let's take a look at what the stop loss size is here. So this would be the order block for a long. Now, considering this is NASDAQ, I'm going to assume, yeah, this is a huge stop loss. So this trade right here is automatically invalid. Something else that could happen here as well is market could potentially react off of this area here, which we can see at this knot. So EM3-ish is not going to happen in this case. It's really looking like a buy is going to occur. Anyways, let's just continue this play out here just for your own purposes, so you can see why I have these limits for these stop loss sizes, and there's a reason why I do. So let's let this play out. So in this case here, we can see that the market actually had lots of volatility. Honestly, this is like a 1 in a million here situation where we have a stop loss size of this size. Like, do you see what the take profit here is? 538 ticks. Okay, like that's huge, right? Like you don't see markets move that much, right? So to take 3R off of a stop loss the size of 179 ticks, it's just too much of a risk. So anyways, this all happened in AM session. This is technically an EM2. It was invalid for us. So it's just not something that we are going to be taking, but we're still going to journal out here just for our own purposes as well. So invalid 0.5, 172, I believe was the number. Stop loss does not meet the criteria. It's as simple as that. Okay, so if we go back to ES here, we're either looking for a reversal sell or a continuation EM3. Considering how NAS is moving, it's possible that an EM3 is going to occur here. We just have to see what happens. We just want to draw up this 10-minute here as well, just in case an EM2 does occur. Okay. we have our break of structure here. However, with that being said, this is valid for an EM2 as of now, so we can use this whole area here. Let's just go to a different time frame to see if there's something cleaner. Actually, I drew that perfectly. Okay, so we could potentially take a short right here. This is a pretty tight stop loss, honestly, so a little bit weary of this trade here. This is a valid EM2. Okay, so immediately once we came all the way back down to a discount array, if we did not enter this EM2 trade, we can just disregard the whole entry, because right now, since we are reacting off of the session discount session array, it could potentially reverse for an EM3 model. So we are now looking for a 10-minute break of structure, which it doesn't appear that we are going to get that. So that is the end of the day for the 26th of October. Let's remove all of these drawings and just get through this as quickly as possible here. Okay, so let's do a quick speed run here. And while these play out, let's quickly check news for the 27th. So we got GDP red news at 8:30 a.m. We got a whole bunch of orange news after that, and then 10:30 we got natural gas storage. So whenever we have red news at 8:30, I'm just gonna want to wait for that New York Stock Exchange open just to see what happens there. So let's take a look here. Oh no, we don't want any of that. Okay, so now let's quickly mark up our news here. So we are not trading 8:30, so I will start to look for trades at 9. So I'm going to draw my indicator, or not indicator, our vertical line there. So 9 is when I'm going to begin looking for trades, because again, like GDP news, it's pretty huge, to be honest. So let's take note here. Previous day high right there. Okay, let's clone that. Previous day low, the lowest point in the day. Actually, ooh, that's Thursday. Okay, Wednesday. Okay, actually, you know what? It was this. Okay, that's the daily low. Okay, so immediately, previous day low, very high probable that we're going to sweep that on ES, but we want to make sure that aligns well with NASDAQ. Let's see what's going on over here. This is way different. Wow, way different. I honestly hate when stuff like this happens. It's just the way it is sometimes. So previous day high, clone that. When was the previous day low? Previous day low was right here. Okay, so right now, I guess we could say that the biases are somewhat aligned after we sweep the previous day low. We have some very nice liquidity here that needs to get swept. This is almost appearing to look like a Tokyo-London reversal. However, it doesn't really necessarily follow all of the criteria. Criteria being that the Tokyo session also has to be continuing the trend, which it's not. So right now it's just a regular EM2. So let's let the market play out here, because we're not trading till 9. We're letting the GDP news go by. So that's what happened there. Okay. All right, let's jump down to the 10-minute time frame. Actually, what am I saying? First, we need to mark up our session liquidity, because once again, 2 variants, EM1, 1, V1, we can either sweep session liquidity and then go towards the daily liquidity, or we can tap into a premium or discount array and then kind of continue the trend from there. Okay. Now we can go down to the 10-minute time frame. We did sweep some session liquidity here. Let's take note of the 10-minute MSS there, bearish. Honestly, this is just so close to the previous day low. I wouldn't even be inclined to take this trade, honestly. Okay. Yeah, because the second, pretty much like for the EM1, you want to be in that trade before the daily liquidity is even like touched whatsoever, simply because daily liquidity can be super unpredictable and you really never know what's going to happen from there. So EM1 is now garbage for here, and we can see why. Look, this is exactly why. Like, if we entered off of this 10-minute order block here, you just would have got cooked instantly. So anyways, now it is 9 for both ES and NAS. So now what we want to do here is we want to look for our EM2 models. Now the bias is aligned on both NASDAQ and on ES, which is very nice. Okay, so we do have a 10-minute market structure shift here. That occurs right there. Now, even without drawing our fib tool, we can immediately see that it's following the continuation there. So this would be the valid order block here, which is absolutely massive. So I don't even know if that's something that's advisable, but oh yeah, see, that just breaks the rules, guys. It's, you know, like what, like how does that doesn't work out. Anyways, let's see what NASDAQ is doing first right now. NASDAQ actually did something interesting. Okay. So NASDAQ continued bearish. And this is not an EM3 model either, because we did sweep out the daily liquidity like really early on in the day. It didn't have any reaction really to this premium array, because that's something that would have happened way earlier on in the day. So that's not even something I'd be looking for an EM3 model. So I'd still be looking for a buy on NASDAQ. We'll follow NASDAQ and see what happens. We even have a nice like liquidity sweep right here. Let's see, was there any other news here that I was missing? 10:30 natural gas. Okay, let this play out. Okay, we got a nice V-shaped pattern here. Okay, let's see what market does. We continue lower. Okay, interesting. We got a new high here for a 10-minute market structure shift. Okay, we want to go on the 5-minute time frame. There's also another reason why we use the 5-minute time frame, because look at this. You know, if we use the 10-minute, it appears to be strong. Like if we use our fib tool, you know, it just passes the criteria. But if we use the 5-minute tool, we would have caught early on that this was really just a fake out towards the buy side. So it's likely just going to continue to free fall from here. That's exactly what happened here. Yeah, I just really seen the market kind of die from there. So yeah, no entries on NASDAQ here. Let's take a look at ES and see how our potential entry here was. Well, once again, very invalid. The stop loss is too large. And the whole purpose of EM2 is to really serve as a reversal. And we didn't even tag the previous day low that much either. So yeah, here's very, very good reasons why we don't take the trades. And you even saw it here, like me doing it live, and the reason why I never actually took this trade here. So EM2 buy would still be valid 100%. And honestly, the fact that it came down here to sweep even more sell side makes me even more confident that I'll have a better reversal buy here. Or not even reversal, you can also call it daily retracement. That's what I like to call it. So now we have our 10-minute market structure shift there. Okay, we actually have a strong close here. Let's just confirm this. So this is the last high for us to have a 10-minute market structure shift. It is clearly very strong. We even have a buy side inefficiency there. So now we want to take a look at our order block. Now, the one problem I have here is that ideally I'd be looking for order blocks of these sorts. These are those higher time frame order blocks. They tend to be a lot stronger. However, a lot of the 3Rs work better off of these smaller order blocks here. But it's really all up to how big the stop loss is, right? Because it's all about risk. So we also want to take note of what liquidity is left for us. Yeah, I'd say this is just not something I'd be at all inclined to take either, because the only days I see both daily high and daily low swept, and I mean ever, has to be on CPI days. So this larger order block here is not something I'd be looking to take. However, this smaller order block here isn't really that bad whatsoever. Let's take a look. Honestly, my only problem with this is just such a small order block that the only way I'd take this trade here is if I extend it to the nearest internal swing low, and then from there we can catch a 3R entry. Now, because this 3R entry is, well, nowhere near that daily high, I'd be more confident in this entry here. So let's just take a look to see how this played out. Okay, so that was a loss right there. So see, there's another reason why really I focus on these larger order blocks there. I mean, I knew here that this order block was relatively small. Like even for NASDAQ, like to have a stop loss as small as 25 ticks, just very, very improbable. So honestly, this is not something I would have taken personally. You'll see later on like more setups that I'd be willing to take and the types of order blocks that I look for. But yeah, that's what we'll go on from there. So I'm assuming this is just going to follow the same trend as NASDAQ did. Yeah, just continue to really tank from there. Yeah, well, that's typical for GDP news. So let's remove the drawings on both of the charts. Let's go to the 12-minute time frame. So that marks the day for October the 27th. No official entries there. Nothing really so far catching my eye, but you know, it's just really part of the game, right? Okay. Ooh, got a little bit of a glimpse. Okay, so let's take a look at the news here. We are looking at Friday. Fridays, we only trade the AM session. I do not trade PM sessions on Friday. It's of personal preference. 8:30, we got core PCI price index, which is red news. So I will begin trading at 8:45 a.m. at the absolute earliest. Let's mark that up on our chart here just for our own reference. Now, if we go to NASDAQ, let's catch up here. Okay, secondly, once we figure out what the news is for the day, we now want to drop our daily liquidity. There's our previous day low. Previous day highs all the way up here. So immediately it's very obvious I am looking for a sell. I am looking to take out that previous day low before even considering these previous day high. The only way I would ever, and I mean absolutely ever, trade towards that previous day high is if I had a very, very strong discount session reaction. So for example, let's say we swept this area here. Okay, we swept that area. We came back down to it. We had a very strong reaction. We broke structure again and then had a strong order block towards that daily high, it's the only way I would take a buy from here. But as of what I'm seeing right now, I'd be looking for a sell immediately, at least until that daily low is swept. And then we can see here on ES, it's really more or less somewhat of the same story. We can see that the daily low is right in our midst. So we are looking for a sell on both of the assets as of now. I want to mark up all the session highs here. Session low just in case of a EM2 or EM3. Let's take a look at what happens here. So right now I'd be looking for a variant 1. The reason why I'm not looking for variant 2 is because variant 2 only works is if the market's like heavily one-sided, which in this case it's not. So okay, so we swept the previous session high there, so now we want to go down to the 10-minute time frame. We see here that the news has gone by, so that is relatively nice here. We can see we have what we can call a shit wick. Why do we call it that? Well, I just don't really know, to be honest with you. It's just what I've heard before. But we essentially took out both sides of the liquidity. So in order for me to consider a sell, I'd have to break this low here and kind of just have like a continuation, really. Either that or we have to create a new range altogether in the 10-minute time frame. Okay, so it appears that we have a continuation. So far the market is looking somewhat bullish. Now remember the scenario I mentioned earlier. The only way I'd be looking to take out that previous day high is if market has a strong reaction towards this discount array here. So we want to go back to the 5-minute. We do have a market structure shift here, so I want to see market return back to the discount, which it just did not, unfortunately, which is no problem. So now that the daily high has been swept on ES, we want to be looking for either an EM2 model for a reversal or an EM3 for a continuation to the buy side. So now let's go on to NASDAQ and see what ends up happening here. We're still looking for a sell on NASDAQ, right? I only continued on here just so it's a little easier to follow along, but we're still looking for a sell we don't see the future, right? So we're still looking for a sell here. So same situation occurred here. We have a shit wick. I want to look for a continuation down here. Okay, the continuation does not occur. So now I want to see a reaction off of this discount array, see what happens. We just did not get that. And honestly, that wraps up, well, yeah, that officially wraps up the Friday, since I only trade the AM session anyways. So that is the end for October. So I want to move this here. Actually, no, it's not the end of October. It's still Monday the 31st. So let's calculate the R for this week. So we had a bunch of invalid trades, that were winners, but the bias was not aligned. So for that reason, we just did not take the trades. So, and I mean like really, really big differences. So anyways, 3R, that's all we had for the week. So plus 3R for the week. And I can just quickly review the performance for August using this model. So the first week really was kind of a mixture of September and August, but for the first week we had 3R for August, and then total for the whole week was 12R, which is nice. Second week 8R, third week 6R, one of the final weeks 6R, 3R, and then we'll have to see for August the 31st. So let's clear our charts here again. for this video, we are just going to cover just the remainder of August there, just because it is getting late here. So let's look at October the 31st. So 31st, President Biden speaks. It's not during our trading hours, so I'm not really too pressed about that. So let's see what happens here over the weekend. Okay. All right, this is setting up very nicely for a buy model. So first we want to draw our daily liquidity. Oh yeah, I'm not even labeling that. It's just too obvious. Let's catch up on NASDAQ. Now, keep in mind for these scenarios here, this here, like it counts because we did sweep the previous session low. However, we're so close to sweeping out that low that I'd want to sweep out one of these. Oh, sorry, not one of these. This London low before I even consider a buy. V2 is not possible because, well, it's not a trending market, which is not a problem. So let's draw out our session low here. We are looking for a buy at the moment. Okay, so we did have that area swept nicely. So now we want to look for where is our 10-minute MSS, which is right there. Or actually, you know what? It would be here just because those are equal highs. Equal highs do not count as areas for a market structure shift. Okay, we do have a gap there. So this swing high is our new area. Let's go down to the 5-minute time frame here. We want to look for a strong market structure shift. Unfortunately, that one was relatively weak, so we want to look for a continuation. Now we can see that the candle body did successfully close above those red lines for the continuation. So now we can look for an entry here. Now bear in mind, these types of entries, yes, they do work. They do look a little bit sketchy, but these entries have worked in the past, so it's definitely something I would recommend. It would likely look like somewhat, oh, yeah, man. Okay, well, never mind, because this stop loss is massive, even if I tried using that smaller order block. But for educational purposes, let's just take a look at it. Wow, this is a huge range. Oh, you know what? Actually, I'm glad that this came up because this is actually something that's very important. So let's say that we did take this trade, right? The second that we execute this trade, we essentially want to be monitoring how the 10-minute is, right? So if I remove that just to help us visualize this a little bit better, we can see that we entered our trade right here. Market continued up. It returned to entry. And then we had a very small 10-minute break of structure here. Okay, and this is important because once we have a 10-minute, and keep in mind 10-minute, not 5-minute, 10-minute break of structure. I'm just on the 5-minute simply because it helps to see a little bit better. We set break even because the reason being, this is a very strong reversal pattern if it does come back down. Once we have that break of structure, there is absolutely no excuse for it to come back down. And if it does continue to our target, who cares? So even if we did take this trade, we would be out of it. I do not care. And look at that. It just consolidated the whole fucking day. That's exactly why I don't take these types of trades. So that's an L for NAS. Let's take a look at ES. So we're still looking for the previous session low to get swept before we can look for a buy. Just because that happened on NASDAQ does not mean it's going to happen here. So let's go down to the 10-minute time frame. Okay. Right there we had our sweep. That is not an equal high. So this officially, as of this time, counts as our 10-minute market structure shift high that we need to swipe. Okay, we swept it again. That is not a good candle. So we are now looking for a new high, which should be this. Okay, so I should be on the 5-minute time frame. Anyways, we have a strong 10-minute market structure shift here. If we take our Fibonacci tool to check out the candle strength from the wick low to the wick high, we can see that the candle body has broken both of the red lines. So in this case, this is a valid market structure shift. We then want to look at the order block here. This is the cleanest order block that we have there. So we'd be going long from here. It follows our parameters very nicely. And then if we target 3R, almost perfectly matches with the previous day high. This looks like a very high probable entry. Okay. Well, we can see here, unfortunately, it's just what happens sometimes, right? So market just consolidated in the drawdown area, in the take profit area, and the market really just didn't do anything. I guess it's a Monday, it's the end of the month. It is what it is. We always close our trades no matter what at 4 p.m. So let's see exactly what would have occurred there. So yeah, we would have been in a little bit of a loss there, like 0.3R loss. So let's just journal this entry here. Actually, I gotta restart this. Okay. I'm just gonna put as a 1 hour lesson. Alrighty, well that'll conclude this session here. We will continue to do November as soon as possible. I'll do a complete breakdown of November. So if we just take a look at the final results of October, so we can see for October, the first week, we did close off with 8R. We did have a loss here with an EM2. So if we put all of this together, say 3, 6, 9 minus 1, 8. 3 plus 3 is 6. So right there, 8 plus 6. We got another 6R here, another 3R right there. So let's just quickly put all of this together. So yeah, we're really not closing October very nicely there, positive essentially every single week, and we haven't even we haven't even started to backtest November, so this week here could very well be positive as well. This is just a placeholder that I have here, so just ignore that. But overall, like, I mean, we're closing October very, very nicely. Let's just quickly add all of these up here. So let's see. Yeah, we got like 8, 6, 6, 3. Look at that. Closing it off. We'll call it 22R, just because we had a small loss here on the 31st.